right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. The new week is upon us, and it was a pretty messy weekend, geopolitically speaking. Missiles flying in the Middle East. Okay, maybe that's not really news these days because, well, that's pretty much a daily occurrence. But there was a lot of missiles flying in the Middle East over the weekend. And you know what? The missiles flying in the Middle East, not to downplay the humanitarian element of that, that wasn't even really the big news coming out of the Middle East. It's this story in Libya that I think a lot of people are not noticing because of the thing with the missiles and the bombs. So let's back up a little bit. Start with the missiles. Over the weekend, there was a very large preemptive Israeli strike on southern Lebanon because they got intelligence that Hezbollah was getting ready to launch hundreds of missiles and rockets. And so Israel launched a pretty massive air campaign, over 100 aircraft, striking targets in southern Lebanon where these missiles were going to be launched from. That's almost a sixth of the entire Israeli Air Force involved in one operation. That's a pretty big deal. Pretty massive coordinated strike there. And of course, shortly after that Israeli preemptive strike, those missiles did start flying. Hundreds of missiles and rockets into northern Israel fired by Hezbollah in southern Lebanon. Laughably, over the weekend, a lot of people were making memes about chicken coops because there was no actual damage. Pretty much everything was either intercepted or fell harmlessly in unpopulated areas, but a chicken coop was struck and many birds were lost. A great humanitarian crisis there. So not to make jokes about it, but all right. So that was the one story that I think got a lot of people's attention. You've also got that other thing going on in Gaza, that other big, missiles flying every day over there. There's still a ship floating in the Red Sea that's full of oil that is burning. The Soyunion, a ship that was struck over a week ago by several drones and missiles by the Houthis. Oh, yeah, that other Iranian proxy group that is blowing things up in the Middle East. That boat is still floating on fire, a potential ecological disaster. That ship carries 4 times as much oil as the Exxon Valdez tanker carried, and there's nobody on board, and it's burning, and it's just kind of sitting there. So congratulations to the Houthis. You may have inadvertently devastated your own shoreline. I'm not sure if you care, but congratulations for that. But the really big story going on in oil markets, and I think what's leading to higher oil prices this morning, is what's coming out of Libya. It's not getting that much attention, but there's been this ongoing dispute between East and West in Libya. In the western part of the country is the internationally recognized government, and then there's this other faction vying for power in the east. There's been an uneasy ceasefire and a truce between the two. But then over the weekend, it looks like the Western government moved to replace the head of the Libyan central bank. And of course, the Libyan central bank decides what happens with the oil revenues that come into the country. And so the Eastern government in Libya said, you know what? You're going to replace our central bank head. We're shutting off the oil flow. And most of the oil reserves in Libya are in the eastern part of the country. And so you're talking about a country with about 1.2 million barrels per day of oil production. That's going to be shut off. Most of that's going to be shut off. You better believe that's going to affect the global supply-demand dynamic. So I think that Libyan shutdown and that dispute there and the risk of the ceasefire falling apart over this central bank action, that's probably driving oil prices more so than the Israeli Hezbollah thing, which is getting more press right now. But that's important to keep an eye on. And while all of that is going on, we've also got this demand side of the oil equation that's very finicky, right? There's no shortage of stories that the consumer in China is just being devastated by this property downturn. We got another one today. PDD Holdings reported earnings. Their stock is getting clobbered because Temu, PDD is the parent company of Temu. They missed their revenue estimates on softer demand, on the Chinese consumer is hurting. So no shortage of stories about how the oil demand situation is a big risk. Obviously, the U.S. at risk of going into a recession as well. Consumers in the U.S. are not doing so well. So right now, oil is headed higher. It has been for the last couple of days, but we're still in that high 60s, low 80s band that we've been in all year. We're moving to the higher side of that band on the recent news, the geopolitical developments. But if this follows the same pattern we've seen for the whole first half of this year, you get a geopolitical event, sends oil prices higher, and then the demand situation comes back to the forefront of people's minds and prices correct lower. Speaking of demand, we got durable goods orders today in the United States. Blowout durable goods orders in the U.S. up 9.9% for the month of July. A huge increase in durable goods orders. So does that mean manufacturing is coming back and the recession is canceled? No, it was all planes. It's pretty easy to see because durable goods, they started up 9.9%. If you strip out defense spending, durable goods was up 10.4%. So defense wasn't the source of the big jump. Now, if you strip out transportation, durable goods orders all of a sudden dropped by 0.2%. So transportation equipment is what drove this big expansion of durable goods. So in transportation, it could be trucks, it could be cars, it could be trains, it could be airplanes. So what is it? Well, when you strip out non-defense aircraft, you still have that negative 0.1% number. So all of these gains in durable goods, this big 9.9% spike that we just saw, that I'm sure everybody is on FinTwit right now saying, oh, the recession is canceled, manufacturing is jumping. It's all Boeing. It's Boeing must have gotten order in July. That big, massive order hits the durable goods. It's a one-off. We get a big spike. By next month, it's going to be right back down. So I don't think Boeing is like this big success story that's going to propel the U.S. economy to greater, bigger, and better things, right? Have you seen Boeing lately? Speaking of Boeing lately, the Starliner. Oh, yeah. Remember that story about the astronauts? We've been talking about that one. Back in June, the Starliner had their first crew test flight. The Boeing Starliner, their new space capsule, the first manned mission on the Boeing Starliner. It docked with the International Space Station. It was supposed to be this big confirmation of the vehicle. Well, there was all kinds of problems with the propulsion system, and there was a helium leak inside this capsule. And these two astronauts who were only supposed to be up there for 5 days, all right, a 3-hour tour, if you will. They were only supposed to be up there for 5 days. They're still up there. They were launched in June. It's now August 26th. They're still up there. And those two astronauts are going to be stuck there until February, when SpaceX is going to send up their capsule to rescue those astronauts. And SpaceX is going to have to send that capsule up there with 2 empty seats to accommodate those 2 astronauts who were stranded there. So this is another big PR disaster for Boeing. All the things going on with the Alaskan Air flights and pieces of the planes flying off. Now their space capsule doesn't work. Elon Musk has to go up there and rescue them. And I'm sure Elon is going to be just unbearable on Twitter about that as well. And yet there's all this political pressure. NASA is like trying to softly word it like, oh, we would like to thank Boeing for working so hard. Like, oh, here's your space travel participation trophy, Boeing. Thanks for the effort. Good job. But we're not putting our people in your capsule again because it's a piece of junk like everything your company has made for the last couple of years because your safety standards suck. Boeing not doing so good here. So that's another reason why I don't think this durable goods order thing was really that big of a deal this morning, because I think Boeing just got one big order for aircraft in. Their aircraft orders have been down all year. They finally got this order in, a big surge in durable goods. It's going to come right back down next month. And last but not least, we got Uber has been hit with a $324 million fine by Dutch regulators due to the transfer of data, or the illegal or unprotected transfer of data from Europe into servers in the United States. And that data was collected against their drivers, included things like travel history, medical and criminal backgrounds. Why is Uber collecting that data? I don't know. But the Dutch regulators did not like the fact that they transferred that data to U.S. servers. So they're hitting Uber with a $324 million fine. That is a not insignificant fine for Uber. Their last quarterly earnings, they reported earnings per share, or they reported total earnings of about $1 billion. So you're talking about a third of their quarterly earnings in one fine to the Netherlands. Uber has said they're going to appeal. I don't know what's going to happen out of that appeal. But another case of European regulators hitting a U.S. tech firm with a big fine. It's almost like European governments are just like, instead of collecting taxes and printing money, they're like, yeah, we'll just hit U.S. tech companies with a big fine. And look, I honestly don't really care because I have no love for big U.S. tech companies. So sue me. Anyways, why don't we shrink my big melon of a head and let us see what is going on in the markets today? Guys, don't forget that like button while we're shrinking me. And of course, if you're new here, hit that subscribe button because we do this every morning. So come have your coffee with the melon heads as we go through markets. And just checking in on that fear greed index at CNN, it is in neutral territory, ever so slightly tilting towards greed here at 53. Remember, guys, we got NVIDIA earnings coming up this week. That's going to be a big deal after the bell on Wednesday. Big market moving event. Stocks are floating near all-time highs here. So NVIDIA earnings will, one way or another, it's going to move the needle. We'll see what we get. But for now, the S&P 500 is up 8 points ahead of the opening bell, 0.15% higher. The Dow is also up 73 points or 74 points now, 0.18% higher for the Dow. And the NASDAQ is modestly lower here, actually, down 21 points or 0.11%. But we got 2 out of 3 indexes are in the black this morning, hence the bull in the thumbnail. Stocks are up for the most part. We've got a slightly stronger dollar here this morning, 100.83 for the DXY. That's up 11 basis points. The dollar has been just absolutely falling like crazy for the last couple of weeks here. Up mildly today, but still below that all-important 101 handle. And looking over at the bond market, we've got mostly lower yields here. The 30-year Treasury is at 4.079%. That's down 2 points and change. The 10-year is at 3.779. That's down almost 3 points. The 2-year, 3.89, down 2 points. And the 1 month is at 5.335, down a fraction of 1 point. The inversion between the 2 and the 10 is currently about 11 points. So back to pretty much where we were at the close on Friday. No big change to that yield curve inversion this morning. Looking over at commodities, it is a good morning for the shinies here. We've got gold near an all-time high once again, $2,525 for spot gold. That's up $12 and change this morning, 0.5% higher for gold. Silver looking even better at $29.97. We were over $30 for a couple of minutes here, but of course, Mr. Slammy can't let that happen in the morning. But silver still up 14 cents, about 0.5%. We've got copper is up about 0.75%. Platinum is up 2%. Palladium is up 2% and change. And WTI is at 77.31. That's up 3.3% this morning, $2.50. We'll have more to say about oil in just a second. Let's check in with the silver chart, though, for just a moment, because silver is looking good here. We caught a nice bounce near the 200-day moving average earlier this month. Broke above the 50-day moving average on Friday, moving higher again this morning, although off of the highs this morning. But silver hovering right around that all-important $30 psychological level. And with silver at right around $30, it's important to point out that the arbitrage opportunity with China and the Western prices here, right? You can buy gold on the London Metals Exchange, or you can buy gold in the COMEX and you can sell it into the Shanghai Gold Exchange. You can get a pretty good premium for that right now. If you look at just this silver price here, the close in the Shanghai Futures Exchange for silver was $33.29 an ounce. That's in US dollars. Obviously, the Shanghais are priced in yuan, but $33.29 right now. So you still get over $3 worth of premium for buying in the West and selling into China. That is still putting a drag upward on silver prices because of what's going on overseas. And also, I want to send a shout out to my friend Bob Coleman from Idaho Armored Vaults. Bob came on the channel last week in an interview, and he mentioned this very thing that Reuters is talking about this morning. India's gold duty cut is likely to spark a buying spree during the festivals. Bob must have been talking to somebody at Reuters over the last few days, because this is exactly what he said might happen. Gold demand in India during the upcoming festive season is likely to remain robust, as the substantial reduction in import duty has made prices appealing, providing comfort to retail consumers and encouraging purchases, industry officials said. Higher demand in the world's second largest gold consumer could support a rally in global prices, which hit a record high last week, but higher demand for gold imports could increase India's trade deficit and weigh on the rupee. The primary beneficiaries of the reduced duty will be retail consumers, said Sachin Jain, CEO of the World Gold Council's India operations. India slashed import duties on gold in July to 6% from 15%, a step aimed at tackling smuggling. Now, just put that in perspective, guys. You can get 10% more gold for the same price now in India because they slashed that import duty. So, it's a pretty big jump there. Plus, they're going into a peak demand season. Demand during the upcoming festival season will be very strong, Jain told Reuters on the sidelines of the India Gold Conference. Gold demand in India usually strengthens towards the end of the year, which coincides with the traditional wedding season and major festivals, including Diwali and Dussehra. when bullion buying is considered auspicious. So good luck to my Indian compatriots with your auspicious gold buying during the festival season. Enjoy those lower prices caused by the duties coming down. Will that be enough to move the needle on gold? I don't know, but it's certainly not going to hurt things. Also, let's check in with Bitcoin here. Bitcoin had a pretty good weekend after a big spike on Friday caused by Jerome Powell's incredibly dovish speech at Jackson Hole. Right now, Bitcoin is trading at $63,759 on Coinbase. That's down about $500 from where we were yesterday, but still up considerably from where we were. You can see here that big green candle. That was Jerome Powell's speech at Jackson Hole last week. Right now, oil is riding its 200-day moving average higher here. Bitcoin riding its 200-day moving average here, moving to the upside. So looking pretty good. Now, let's shift over to oil for just a minute because we've got this one. After risky face-off, the Middle East is back to normal. And they're using air quotes here, whatever the heck normal is in the Middle East these days. This isn't the end of the story, vowed Israeli Prime Minister Benjamin Netanyahu after sending 100 warplanes swooping over southern Lebanon to take out thousands of Hezbollah rocket launchers minutes before they were due to fire. Hezbollah retains the right to respond further, asserted Hassan Nasrallah, the group's secretary general, hours later after firing 200 rockets and drones at Israel in retaliation. And so after the most dangerous confrontation between Israel and Hezbollah in the 10 months since they renewed active combat, the Middle East is back to where it was the day before, on edge over missteps, but embracing a kind of choreographed containment that avoids all-out war. Now the focus returns to Gaza ceasefire talks underway in Cairo, which weren't interrupted by yesterday's flare-up. So, yeah, okay, more missiles flying in southern Lebanon, or, Saturday, as we call it here in the West. They're always shooting back and forth. It was a particularly high volume of fire, 100 planes taking out thousands of launch sites. So this was a pretty big flare-up, but the market is just kind of shrugging it off. I would also add, guys, that Union tanker, keep an eye on that one. This is the third time now we've mentioned it on this channel. Initially, the attack on the tanker, and then the fact that it was still floating out there. Well, now it's on fire. Fires burn on Houthi-hit oil tanker, but no spill yet, the European Union says. This could end up being an ecological catastrophe here. Fires were burning around the oil tanks of a ship that was attacked by Houthi militants in the Red Sea, but there were no signs of a spill so far, the European naval force in the region said. Flames were seen in at least 5 locations on the oil tanker Union after multiple attacks last week, according to the UNAVFOR Aspides, whatever that means. Images posted on X show flames coming from the main holds of the vessel where oil is stored, as well as around the ship's bridge. The naval force said the ship is an imminent environmental hazard. Now, I just want to show you guys some of these pictures that are being floated around on X. You can see here fires in several points on the deck. You can see oil is sitting on the deck. The ship is unmanned right now. There's nobody on board. So this thing is powerless, adrift, and on fire. The fires aren't huge, but this thing has over 1 million gallons of crude inside. So also the bridge is shown on fire here. Interesting that they mentioned this was unmanned, because this picture, it sure looks like there's a guy standing right there on the deck. Yep, that's pretty sure that's a guy standing on the deck there. But here's another shot. The ship is on fire. A tanker on fire, not under power, floating in the Red Sea after being hit by missiles and drones. What's the worst thing that could happen? Don't answer that. Again, roughly 4 times the oil on this ship as the famous Exxon Valdez that caused that big oil spill in Alaska in the 80s. Now, the main story, though, that's driving oil prices this morning is this one coming out of Libya. It's not getting as much headline attention as the missile attacks and the burning ship, but I think this is probably affecting most of the price action in oil right now. Libya's rival government to stop all oil output amid bank row. Central banks are at it again. Libya's eastern government said it will shut down all oil production and exports after its Tripoli-based rival moved to replace the leadership of the central bank. The force majeure applies to all fields, terminals, and oil facilities, the eastern authorities said Monday in a statement on Facebook. Brent crude prices jumped as much as 2.2% to above $80 a barrel. A row over who leads the central bank, the manager of billions of dollars of energy revenue, has been brewing for over a week now, deepening political divisions and threatening a UN-brokered peace deal. The internationally acknowledged government in the country's west has been seeking to replace Governor Sadiq al-Kabir, who has refused to step down. A government delegation entered the regulator's offices today to take it over, according to local media. The country produced a total of about 1.15 million barrels per day of oil last month, according to data compiled by Bloomberg. Since then, the biggest oil field, called Sharara, which was pumping nearly 270,000 barrels a day, has halted. The east is home to the Sirte Basin, where most of Libya's oil reserves and 4 of the country's oil export terminals are located. A drop in exports may push Brent crude prices temporarily to the mid-80s a barrel, analysts at Citigroup said in a note earlier on Monday. So let's just take a look at the oil chart here, guys. You can see oil, this is going back to about May of last year. We've pretty much been bouncing around between the, low to mid-80s, and then we went as low as the high 60s, but pretty much oil's just been floating all year here in the 70s as we get this bouncing up and down between Middle East turmoil and, worries about global demand. But I would point out, guys, that the trend overall is down. Lower lows here, although we also have a little bit of a, I don't know, would you call this a wedge forming here? A descending wedge? I don't know. But right now, guys, most of the focus is on geopolitical risks. That's taking prices higher. But you've also got a lot of concerns about demand. So we'll see where oil goes from here. We're coming up on the 200 and the 50-day moving averages, which may supply a little bit of resistance there. Now let's talk a little bit more about the demand side of things, starting with durable goods orders in the United States. New orders for manufactured durable goods in the U.S. surged by 9.9% from the previous month in July, making up for the downwardly revised 6.9% decline in the earlier period. That's the most since May of 2020 and firmly above market expectations of a 5% expansion. The result challenged the growing pessimism over manufacturing activity in the United States, suggesting the current slowdown may be temporary. Not so much, though. First of all, look at this big blue candle here, right? 9.9% expansion in durable goods month over month. That's a huge jump. But the problem, guys, is, like we said earlier, it's all aircraft. All right. And you can see it right here. United States durable goods ex transportation. So when we take out transport equipment, durable goods ex transport in the U.S. decreased by 0.2% in July from 0.1% in June. Durable goods ex transportation in the United States averaged 0.23% from 92 to 24. So no big deal there. But so if you take out planes, cars, and trucks, you end up with a decline in durable goods. All right. So that's a big deal, guys, because another data point here, ex-transport, non-defense, ex-air, you had negative 0.1. So that one puts cars and trucks back in, and still there's no growth in durable goods. So it was all ex-transport. It was all aircraft that's driving this. That's why Zero Hedge is calling this the Boeing bounce this morning. Basically, Boeing is responsible for this big jump in durable goods orders. But you know what? That's just because Boeing hasn't been getting many orders all year because of their obvious quality problems. Some airline somewhere ordered a bunch of planes in July, and it's all hitting all at once. It's causing this big spike. It's going to go right back down next month. So I'm not reading too much into this durable goods orders report. Neither did the stock market. The market barely budged when this report came out. Now let's talk about more bad news for Boeing, though. Boeing Starliner returning empty as NASA turns to SpaceX to bring astronauts back from the ISS. This is a humiliating defeat for Boeing, having to be rescued by their competitor. Boeing will return its Starliner capsule from the International Space Station without the NASA astronauts that it delivered to orbit in early June, the agency announced on Saturday. With Starliner coming back to Earth empty, NASA will now have astronauts Butch Wilmore and Suni Williams return via SpaceX's Dragon spacecraft, which is expected to launch its 9th regular mission to the ISS for the agency on September 24th. Ultimately, Wilmore and Williams will stay at the ISS for about 6 more months before flying home in February on SpaceX's Crew 9 vehicle. The test flight was originally intended to last about 9 days. The decision to bring Starliner back from the ISS empty marks a dramatic about-face for NASA and Boeing, as the organizations were previously adamant that the capsule was the primary choice for returning the crew. Gee, you think there might be some political pressure on NASA to use this vehicle because, I don't know, maybe Boeing's got a couple of people with some sway in the government, just maybe. But Starliner's crew flight test which had been seen as the final major milestone in the spacecraft's development, faced problems, most notably with its propulsion system. Boeing has worked very hard with NASA to get the necessary data to make this decision, NASA Administrator Bill Nelson said during the press conference with top NASA officials at Johnson Space Center in Houston on Saturday. We want to further understand the root causes and understand the design improvements so that the Boeing Starliner will serve as an important part of our assured crew access to the ISS. And that is some political nonsense. We thank Boeing for working hard and giving us some information that showed that their vehicle is not safe, and so we won't put our people on it. But we hope one day Boeing will return to being an important member of our team. Political hogwash for Boeing screwed the pooch. We're not putting our people on this thing until you guys can prove it works, which it doesn't. And so Elon Musk is going to have to come up and rescue our astronauts. This is another black eye for Boeing this morning. Boeing stock is down 1% ahead of the opening bell at $173.11. That's down $1.85. Now let's talk about some more demand problems that could potentially affect oil. China's PDD Holdings misses quarterly revenue estimates. PDD Holdings is the parent of Temu. This is another story about declining demand in China. China's PDD Holdings missed market estimates for quarterly revenue on Monday as reduced consumer spending dented business at its domestic e-commerce platform. Oh man, I'm going to try to pronounce this. Pinduoduo? Did I say that right? Sending the company's shares down 15% in pre-market trading. A fragile economy, persistent weakness in the property sector, and high unemployment rates have led Chinese consumers to cut back, damaging the country's retail and e-commerce sectors. And look, people ordering less plastic crap on Pinduoduo, whatever that thing is, means less demand for oil, right? And that's another sign of recessionary forces, of slowing demand, of deflation in China. PDD Holdings stock is now down 21% ahead of the open here, trading at $110, down almost $30. Another big indicator of slowdowns for Chinese consumers. You also got another, we'll say a small indicator, another story about Chinese consumers this morning. Din Tai Fung to close China outlets amid weak consumer spending. Now, this isn't a huge outfit. This is just a restaurant chain shutting down a couple of restaurants. But the point is, here's another anecdote about weak Chinese consumers. Something to keep an eye on here. Taiwanese dumpling chain Din Tai Fung will close more than a dozen stores in mainland China, a market that's seen a brutal price war among restaurants to lure increasingly frugal Chinese consumers. All right, now again, a dozen restaurants closing, hardly global news here, but look at some of the words that they're using. A brutal price war. That sounds awful deflationary. China's been struggling with deflation. Increasingly frugal Chinese consumers. There's that wealth effect, the Chinese property downturn, slowing down consumer spending in China. This is a very powerful market force, and I don't think the Western press is really appreciating just how significant this really is. Every day there's somebody on Bloomberg or CNBC calling a bottom in China, and every day things keep getting worse there. You just can't unwind a multi-trillion-dollar property bubble without more pain. And it's just getting started for China, guys. Again, this is something like a $30 trillion property bubble in China right now. And the unwinding of that and the subsequent collapse of property prices is going to make people feel poorer via the wealth effect. And so they're going to spend less. And we're seeing that in PDD's earnings. And we're seeing that in Din Tai Fung closing their dumpling outlets. China is in big trouble here. And the last one of the day, Uber hit by a record $324 million fine for data transfers to the U.S. This is a significant deal for Uber, guys. It's about a third of their quarterly earnings here. Uber Technologies was hit by a record 290 million euro, that's about $324 million, by the Dutch privacy watchdog for failing to abide by European protection standards when it shipped swaths of sensitive data about its drivers to the U.S. The Dutch Data Protection Authority said Uber was collecting information of drivers from Europe, such as taxi licenses, location data, and in some cases, criminal and medical data, and retaining them on servers in the U.S. The fine is the highest penalty ever issued by the Dutch watchdog against any company, a spokesman said by email. It's also the biggest fine Uber received globally. Uber stock barely reacting to this one. Now, Uber is planning to appeal this decision, so it's not going to instantly hit their earnings. But you're talking last quarter, Uber reported $1 billion in earnings. So A $324 million fine is going to take a big chunk out of that. Right now, though, Uber's down just a nickel here, 0.07% lower, trading at 74.25. So barely shrugging things off there. And I just want to say thank you very much to Eduardo Garcia. Thank you, Eduardo, for the super chat and the support of the channel, sir. He says, have you seen the premiums on 2026 SPY puts that are deep out of the money? Love everything you do. You are a hero. I can't say I have. I haven't specifically looked at 2026 SPY puts. Look, guys, I don't know what is going on in the options market right now, but it is a freaking mess. You have got people who have no business trading options are out there selling courses and writing books on how easy it is to make money selling options. All right. Oh, zero DTE puts, short volatility, pick up pennies in front of that steamroller. It's free money. You can't possibly lose. Right? We've been here in 2018. We've been to this exact place in 2018. And then we had Volmageddon, and those people got wiped out in the blink of an eye, like almost happened on August 5th. And the only reason it didn't happen on August 5th is because those freaking crooks that are in charge of the market shut down all the stock brokerages. They just turned them off so nobody could sell. And that's the only reason they were able to stop that. And then, of course, some Japanese regulators showed how spineless they were. And they were like, don't worry, we're done with the rate hikes. Don't stop with all the unwind of the carry trade. And so everybody just piled right back into that short volatility trade and piled right back into that short or right back into the zero DTE puts and right back into the yen carry trade. So I haven't looked at the SPY 2026 puts specifically, Eduardo. I honestly, I don't know what that means. I'd have to go study the data to really guess. But just be careful, guys. These trades are so freaking crowded right now, so crowded. And Michael Gayed used the what's the phrase? He used the word, everybody is on the same side of the ship holding an anvil. All right. And what happens if everybody drops the anvil? If everybody runs to the other side, the ship's going to roll over and capsize. So these crowded trades, they're widowmakers. Be very careful. And Eduardo was back saying the premiums are high. So somebody out there, you got high premiums. And what are they? 2026? I don't know. Let's assume January 2026. Somebody is betting on a big surge in volatility. Somebody is betting on a big downward move in the S&P 500 between now and 2026. I don't think that's that bold of a call. I think there's no shortage of potential catalysts for a big sudden sell-off, right? Anything other than perfection from NVIDIA is going to take this market lower. You've got massive risk going on still in commercial real estate. You've got massive risk still built up in the banking system. You've got risk over in Japan of the yen carry trade unwinding. You've got Japanese banks that are foundering because of wrong way bets on interest rates. Europe is just an absolute mess. Take your pick of problems in Europe, higher energy prices, taxes, recession in Germany. Obviously, China is a total CF. And then here in the States, you've got consumers are starting to show problems. You've got the commercial real estate thing going on still in the States. And, the average person can't afford the cost of living, even though everybody is on TV telling us it's the best economy ever. So any one of these big disparities could trigger some chain of events that sets them all off. So I guess I'm not too surprised to see somebody making a big bet on 2026 SPY puts, and they're paying a big premium for it. Just be careful, guys. There's a lot of really crowded trades out there. That's all I would mention there. And thanks again, Eduardo Garcia. I appreciate the super chat and the support of the channel. Guys, Wednesday is going to be the make or break day for this market when those NVIDIA earnings come out after the close of the bell. In the meantime, you're going to see a lot of articles about what might NVIDIA do, what's NVIDIA going to do. But in the meantime, hold your breath, guys, because one way or another, it's probably going to move markets. But anything shy of perfection in this market is heading south in a big way. And that's all. Oh, wait. Stop the music. Stop the music. Becky Heffernan, you almost did it. You almost dropped the stealth super chat before I signed off. Becky says, Jack, thanks for all the excellent info here and on the Doomer collab with Travis and Melody. Thank you very much. You guys are awesome by yourselves and together. Hope you have a wonderful day. Thank you very much, Becky. You may notice we didn't put out a piece on DNN this weekend. People's schedules didn't allow for it, but DNN will be back midweek with a special this week. So we'll be talking about this on DNN. Don't worry. We're still doing it. And shout out to my buddy Travis from Real Estate Mindset and my friend Melody Wright at Melody Wright on YouTube as well. My partners over at DNN. They are two awesome people with their own channels that are fantastic. Thank you very much, Becky Heffernan, for the shout out. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate the super chats and the support of the channel. Thank you so much to my magnanimous Melonhead members on Patreon and YouTube. I appreciate that very much, guys. Links down below to all that good stuff. Should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.